Every day, thousands of Americans are turning 65, around 10,000 per day. Per day are turning 85. We have 77 million baby boomers in the United States. 7 out of 10 of them are going to require long-term care. And independent living is the start of that. Florida is ground zero for this silver tsunami, for the wave that economists are talking about. This isn't just a temporary trend. This is a massive opportunity in an undersupplied market.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor!
Now, here's your host, Dr. Alex Schloe.
Hey everyone, I'm Ryan Byrne, managing partner at Cashflow Capital Club. I've been in real estate for over a decade now, managing more than 1,300 multifamily units and participating in several ground-up developments across the country. But what really gets me fired up is helping investors participate in deals, particularly like this one. Institutional quality projects that produce both cash flow and appreciation without all the headaches of traditional real estate.
Yeah, Ryan, I am looking forward to this presentation. I am Dr. Alex Schloe. I'm a Christian husband, a father, a family physician, and an Air Force veteran. Also a real estate investor, passionate about helping others achieve freedom through purpose-driven investing. I'm the co-founder of Open Range Capital, the Row Room Assisted Living Mastermind, Physicians and Properties, and we partner and acquire and develop senior living communities across the country. In my little bit of spare time, I host the Physicians and Properties and the Row Room Assisted Living podcast. I love networking with physicians and professionals that are looking to build wealth and design a life they love through real estate and entrepreneurship.
Great, Alex. Thank you. This project, the Preserve at Rockledge, is one of those rare opportunities where impact and profitability meet. And today, we're going to unpack exactly how we've structured it, who's behind it, and why it's positioned to deliver such incredible results.
Welcome, everyone. Imagine turning a family's legacy land asset into a thriving community that delivers exceptional returns for investors who can join us. We're thrilled to present the Preserve at Rockledge. This is a ground-up opportunity that's been years in the making, positioned to ride the silver tsunami.
Alex, when our team first walked this property, we didn't just see 46 acres of raw land in Florida. We pictured morning walks under oak trees, families visiting seniors, a senior community built with purpose. And for investors, we saw a clear path to deliver 75% average annual returns and a 4x equity multiple in 4 years using intelligent structuring, risk-mitigated ground-up development. And we're going to do this without the headaches of traditional value-add workforce housing projects that we've done in the past.
Yeah, this vision has become the heartbeat of this project. This is going to be a place where design, dignity, exceptional care, and strong returns for our partners can come together and just take part in something that's truly special. Today, we'll walk you through the story, the strategy, and how everything fits together in this project. But I want you to ask yourself, are you ready to join a project that's fully funded and ready to go?
Before we jump in, let's go over this disclaimer, pause this screen and read this fully. But a quick note, today's discussion is for informational purposes only. We're always going to review full project documents. Those will be made available in the investor portal, and consult your own advisors as needed before making investment decisions. And if you're ready, let's get into the good stuff.
Absolutely. Well, here is where we're headed. First, we're going to talk about the opportunity, the origin story, and then our team and design vision, how construction and operations come together, and finally, Ryan will take us through the numbers and next steps. By the end of this webinar, you'll see why this is one of the highest returning, best risk mitigated projects that we've ever offered and how you can secure your spot.
And we'll go into detail exactly how and why these returns are the way they are. There's going to be a few key points that led us to this, but I want you to think of this as a guided tour from problem to plan, to outcome both for investors and the seniors that will be living here. So most investors see the stock market as wild and confusing, and they hate watching idle cash get eaten by inflation. When you're working with us, you get insider access to real estate deals just like this that produce cash flow and appreciation without tenants, toilets, and all that drama. And that's why nearly 100 active investors are now working with us, pursuing these types of value-add and ground-up development investments in the strongest markets in the country.
Yeah, Ryan, and this project is just one of the clearest examples of that mission in action.
So what this project does is it focuses on active senior adult living. Think of it as a community of 55 plus active seniors being cared for, living in a nice place with amenities. And what you see in front of us right here is actually, you're supposed to be doing this part, right?
Yep. What we see here is a bit of the Silver Tsunami. We're building during a moment of massive demographic change across the United States. Every day, thousands of Americans are turning 65, around 10,000 per day. Per day are turning 85. We have 77 million baby boomers in the United States. 7 out of 10 of them are going to require long-term care. And independent living is the start of that. Florida is ground zero for this silver tsunami, for the wave that economists are talking about. This isn't just a temporary trend. This is a massive opportunity in an undersupplied market.
That's right, Alex. Those are some big, big numbers that we're talking about. And that surge has created a simple equation. It's more seniors and fewer suitable homes for them. Demand is rising and supply lags behind. So for you as an investor, that means higher occupancy and stronger rents and massive return on equity and resilient cash flow.
Absolutely. Yeah, the supply-demand mismatch is the villain in the story. And we're so excited that the preserve at Rockledge is the plan that solves it.
So when we talk about where opportunity lives, it usually follows the people in their movement where they are. And right now, they're coming to Florida. Seniors alone will account for more than half of the state's total population growth. And that means nearly 6 out of every 10 new Floridians will be over the next decade will be over the age of 55.
That's wild. And Ryan, it's not slowing down. In 2023 and 2024, Florida stayed the number one destination for retirees moving from other states. The AARP called it the gold standard for retirement migration. People from New York, the Northeast, Minnesota, Virginia, North Carolina, you name it, they're heading south. They're headed to Florida.
And I did some research on why that was the case. Seniors moving to Florida are looking for 3 things. They like the economics, the low tax environment for retirement. They love the weather, and they love that staycation lifestyle that Florida happens to offer. And what's wild is that scale of migration that you can see on this page right here. Florida attracts seniors at roughly 3 times the rate of any other state. 3 times. And that's the tidal wave that we're talking about.
Yeah, it's like the tsunami on the silver tsunami, it sounds like. And when you look at the chart, that spike that we see in that 70 to 79 age group tells the story. They're all active, independent. They want sunshine. They want healthcare access. They want the lifestyle. And as you mentioned, Ryan, Florida delivers on all 3 of those.
So for anyone studying the long-term housing demand, this is the heartbeat of that. Seniors are moving here faster than anywhere else in the country, and they're not leaving. And that's why projects like the one right here, the Preserve at Rockledge, make sense. They're built for the population that's actually growing. Now, let's look at the other side of the coin, who these people are and what resources they bring. As of 2024, Americans aged 55 and older control nearly 70% of all the household wealth in the country.
That's unbelievable, but it's right, 70%. They also own almost 8 out of every 10 shares of U.S. stocks and equity funds, and about 70% of the nation's housing wealth. This is by far the most financially secure generation in American history.
And you combine that affluence with the migration, and you get a powerful equation. It's an enormous, well-capitalized population actively seeking quality communities where they can enjoy that last chapter of life.
Absolutely. Yeah, hopefully just the next chapter, maybe the last, but hopefully not. But that's where the projects like the Preserve at Rockledge come in. This isn't about selling luxury. It's about serving people who have the means and the desire to live well. Investors are going to benefit because the demand is deep and stable and backed by real wealth, but the seniors are the true winners here.
Yeah, and we'll be serving what looks like the strongest demographic in America, people who have resources, clear preferences, and a lifestyle they're willing to invest in.
Yeah, this is why this demographic is just so attractive. It's predictable, it's value driven, and when you deliver excellence to a financially strong audience, everyone wins: the residents, the communities, and the investors who make this possible.
Now, here is the pain point. All across the United States, all across America, senior housing construction simply hasn't kept pace with population growth. And especially for the senior population growth, in many metro areas, waiting lists are months long. And when you compare the available inventory to the projected demand, the shortfall is staggering. For example, you see here on this chart, we need 560,000 new senior units by 2030, but only 191 are projected at our current rate of development. That's a 369 unit gap that spells massive opportunity for us as investors and developers.
Yeah, and that's the challenge that we're solving. I mean, we're building more than housing. We're creating a community for a generation that deserves a whole lot better. And for investors, it's about creating a high yield asset in a needs-based market that's resilient through all market cycles, and this is going to last for decades to come.
Now, let's take a look at where we're doing this. Rockledge, Florida, sits right in what Florida calls their Space Coast corridor. It's close to beaches, healthcare, and major employers. It's one of the fastest growing senior markets in the state. And with the 55 plus population growing 23%, in the next 5 years, demand will continue to put pressure on both rents and housing.
When you combine the lifestyle, accessibility, and the cost of living, Rockledge checks every single box. It's the perfect setting for a project that's going to blend wellness, recreation, and belonging.
Now, here's one of my favorite slides. It shows exactly why we choose Rockledge, why seniors choose Rockledge. You're literally surrounded by everything seniors love about Florida living. There's beaches, golf, cruises, shopping, even rockets launching into space.
Yeah, you have the country club right next door, Port Canaveral 20 minutes away. The Kennedy Space Center is just up the road, and Cocoa Beach is half an hour to the east. It's the perfect mix of relaxation and adventure.
And what's amazing is how connected it is. You're 30 minutes from Melbourne Airport, 45 minutes from Orlando International, and just about an hour from Disney and Universal. So whether residents want to stay local or host a visiting family, everything is right here, is within reach. Now, when you look at Rockledge and its economics, you see a city that checks every box. It's landlord friendly, it's growing, it's positioned right in the middle of Florida's famous Space Coast.
Yeah, and the numbers tell the story. There's a 10% population growth since 2010. Unemployment is around 3% and a strong median income coming out around $84,000. That's the kind of economic stability that you want behind any community.
And rents have experienced an 8% rent growth since 2020. And Rockledge sits in that sweet spot between Cape Canaveral, Cocoa Beach, Orlando. People want to live here, and the data proves it.
Yeah, I want to live there too, Ryan. But bottom line, Rockledge offers the perfect blend of growth, stability, and lifestyle. It's the kind of market that keeps residents happy and investors as well.
Now, this map tells an additional story. We're not just counting on the Silver Tsunami. When we develop here, we're talking about in-place demand. It's already there. When we looked at this market, we wanted more than just a hunch of news stories about the Silver Tsunami and their pain point. We wanted hard data that supported it. So we brought in Greystone Communities. They manage 50 senior communities across the country to conduct a full feasibility study and compare it to their national portfolio.
Yeah, and what came back was amazing. Out of more than the 50 markets they track nationwide, this area, right here along Florida's Space Coast, ranked as the single most attractive place to operate in terms of supply and demand.
And that's what you're seeing on this map. You see the scatter points all over the place. That's 6,740 households, 75 and older, with incomes above $75,000 a year. And they're all clustered within easy reach of our site. That's a deep, well-qualified demand base that we have there.
Absolutely. And in short, the data confirms what we already felt about the senior market in this area. This land has history. It's been in one family for over 60 years. After the family patriarch passed, the siblings, they wanted to create something lasting, a community that would serve people for generations. And by the family owners contributing the land as equity, they've helped us save $9 million in capital. This means more profits going to all of us that are investing in this project.
Yeah, and that is one of the key points that helped boost these returns so much. That's less capital needed for the project, more profits to distribute among fewer people, just plain and simple. That was a big move in how we structured this particular deal. And this family, they didn't want to flip property or just offload raw land. It's been in their family for so long. They wanted to see this family asset turn into something meaningful. And that's why they partnered with us, our team, to bring the preserve at Rockledge to life. So this partnership not only honors their family legacy, but it creates a lower risk entry for our investors as well, with the project funding needs already lined up.
All right, here is what this site is going to become. 320 homes that are woven around trails, water features, and green space. Think resort-style amenities, a clubhouse, pool, gardens. We can't forget pickleball. They'll be walking past, and this is all going to be designed for connection, community, safety, and comfort.
And this isn't theoretical. The city has already seen a preview of our plans, and they are very excited for this to get started. All the entitlements are in place for this build, with architectural design work and site work plans ready for final approval, where we plan to break ground in the second quarter of 2026.
Yeah, and the cool thing about this is we've actually won some design awards for this project. And let's go ahead and zoom in a little. The preserve at Rockledge will include 2-story buildings with elevators and 32 single-level cottages. Everything was designed for comfort, convenience, and for community.
And every unit will have access to the same resort-style amenities: the clubhouse, the cafe, fitness center, a business hub. There will be outdoor pavilions and miles of trails. Residents can age in place without feeling boxed in like other traditional senior communities have offered.
Absolutely. This is more than housing. It's planning for that next chapter in life. Yeah, as I mentioned earlier, the landscape plan has already earned an ASLA Florida Design Award. This is blending architecture and nature, and it's proof that excellence on paper is turning into excellence on the ground. This award-winning design not only attracts residents, but qualifies us for $50 million in low-cost PACE financing that's further boosting investor returns.
Yeah, and awards aside, that recognition matters. It shows city planners, lenders, residents that this development has quality baked in from day one.
Yeah, it's built and structured to make sense with regards to financials as well.
And it also reinforces our timeline because design approval at this level streamlines municipal cooperation that we've received so far. So every path here in this community invites connection. Think neighbors meeting, conversation starting, and life happening naturally around this community.
And at the heart of this community is a 2-story, 22,000 square foot clubhouse. This is going to be the place where everything comes together. It includes a pool, a pavilion, a cafe, business center, meeting rooms, everything that's designed to keep life vibrant, social, and easy.
Here's a rendering of the Nature Center Pavilion. And this brings the outdoors to life. It's an open air space built for gatherings, learning, and connection. And it'll also double as an educational hub, highlighting the wetland conservation efforts that go into this development and its sustainable design. It's a perfect blend of beauty and purpose.
Yeah, and the grandkids are going to love this. There's a playground where they can come and play when they visit their family members.
Here's a rendering of the ponds and walkways that we're designing that not only support irrigation, but encourage native species and gives residents miles of peaceful paths to walk, reflect, and recharge.
Yeah, and Ryan, one thing that I love about this project, and I know we're proudest of, is how intentionally we've worked with the land, preserving and relocating nearly 500 mature trees, and in total, over 500 native trees and more than 200 sable palms are going to surround the community. This is proof that new development and ecology can happen together.
And let's summarize the amenities that a Class A offering like this has. The 2-story clubhouse, the resort-style pool, wellness garden, dog park, pickleball courts. It's pet-friendly, plenty of different environments for the residents to enjoy, and plenty of space for the grandkids and gatherings on their way to Disney World as well.
Absolutely. Every feature, as we've hit on, creates connection with our seniors. And we're designing for community, for belonging, not for isolation. Projects like this rise or fall on the people behind them. Let's go ahead and meet the team. And before we chose our build partner, we explored several world-class construction systems and firms. We had no shortage of overqualified candidates, and they each had impressive credentials.
And one partner really stood out, a team that could deliver institutional quality and do it on time and on budget.
Yeah, and that is rare. And these folks are the masters of the tunnel form concrete system, which gives us faster, stronger builds with predictable cost, and it meets our budget and our timeline.
And that was Kaufman Lynn. Kaufman Lynn Construction rose to the top, and not just for their reputation, because they've mastered the exact systems that keep projects like ours running smoothly.
And one of the main reasons that we chose Kaufman Lynn was their proven success with the tunnel form concrete system.
And it's this type of system is the precision that gives us faster builds, predictable cost, and stronger structures. The foundation of risk mitigation and more cost predictable than stick builds methods. And that's how you go into a project like this de-risked. So when we looked at all the data, speed, cost, safety, consistency, and quality, Kaufman Lynn checked every box. And the tunnel form method delivers an entire floor in roughly like 1 to 3 days. It's like watching this vertical construction project in fast forward.
And their process delivers predictable quality, which means less risk and more confidence for our investors. And when we compared Kaufman Lynn against national players, that choice became even clearer.
Yeah, their experience, Kaufman Lynn is not new to this game. They've been building for nearly 30 years and delivering everything from large-scale multifamily projects, senior living communities, to luxury residential towers, city halls, municipalities, corporate campuses. This is the kind of builder that doesn't just talk about execution. They've proven it, and they have a portfolio, 300, 400 unit developments, and $100 million plus dollar builds across the country.
Yeah, and what's really impressed us with them is their consistency. They've got dozens of active permits across Florida and the Southeast, over 40 just this year alone. That kind of repeat business doesn't happen by accident. It happens when cities, investors, and developers trust you to deliver again and again.
So when it came to choose our general contracting partner, we had options as well, a lot of them. But in the end, Kaufman Lynn's depth, financial strength, and reliability made that decision very easy. So let's look at how we have evaluated those choices and why Kaufman Lynn came out on top here as well. When it came time to choose a general contractor, we wanted a partner who can provide certainty and a great build. And we compared Kaufman Lynn with other regional and national firms, each highly qualified, to make sure we were partnering with the best candidate. Each had strengths, but Kaufman Lynn gave us the perfect blend of financial strength, speed, certainty, and specialization in the senior housing that we're building.
Yeah, and Kaufman Lynn, they won ENR Southeast Contractor of the Year. They did nearly $500 million in annual revenue, and they have $1 billion bonding capacity. That's the kind of financial strength that reduces execution risk before the first shovel even hits the ground.
Yeah, that $1 billion bonding capacity is very powerful. That is backed on their performance and delivery guarantees when we're doing this project, so that we have certainty, not only as developers, but you as an investor. Kaufman Lynn has delivered $70 million plus. They've delivered $70 million worth of multifamily and senior living projects using this efficient, repeatable build system that keeps costs predictable and the timelines tight.
Yeah, they have a deep Florida presence that brings both scale and stability. The result is speed, certainty, and a stronger structure.
So once we knew exactly who was building it, the next question was just as important: who is going to run this?
Yeah, and I want to hit something real quick, Ryan, as we're talking about the construction. The question that we get a lot is the risk mitigation with hurricanes in Florida. And just want to talk briefly on just how strong that tunnel form concrete is. Like, this is a very resilient, robust structure that is quite resilient to any hurricanes or weather-related conditions. All right, let's go ahead and talk about the operator. So we applied the same selection rigor to our operations partner. Again, we were so blessed to have multiple strong candidates, from national players to a more specialized boutique operator.
Now, Colonial Oaks stood out for a few reasons. They're people first, their health and wellness driven approach, and their experience in the senior space, and especially their lease-up strategy, which is super important to us as developers and investors.
Yeah, it's awesome. They've mastered occupancy with quick lease-ups and genuine care. Their motto, which is amazing, is love and serve our neighbors. And that's who you want managing your asset.
And so we weren't just looking for an operator with experience. We wanted one who shared our mission to serve seniors with dignity, care, and connection. With nearly 50 years of excellence and 95% plus occupancy rates, Colonial Oaks brings both compassion and performance to the table. Colonial Oaks brings 50 years of experience serving seniors across multiple states. And what we love most is their values line up perfectly with ours. They lead with care, they operate with excellence, and build communities that last. They're not just managing a property, they're creating an experience. So with 95% plus occupancy across their portfolio and a reputation for doing right by residents and investors, they give us and you that peace of mind that performance will follow.
Yeah, Ryan, that's why they were the clear choice. Among all the operators that we evaluated, Colonial Oaks stood out for really one simple reason. They make the residents truly feel at home, and that's what drives long-term stability. And here we go. And just like we were selective with our operator, we brought that same intentionality to our design team, because great operations also starts with a really great design.
So when it comes to design, we applied the same rigor again we did with our builder and operator. We interviewed multiple architectural firms, each highly capable, creative, and experienced in large-scale residential designs.
Yeah, we weren't just looking for design talent. We wanted a team that understood the balance between beauty, functionality, and cost efficiency, because great architecture has to look good on paper, but also perform in the field.
And that's how Barnett Design Studio rose to the top. They stood out for their experience in design both multifamily and healthcare environments, spaces that have to meet the exacting standards without losing that warmth, peace, and comfort of home. So let's take a closer look at what made Barnett such a perfect fit for the Preserve at Rockledge.
Barnett Design Studio is known for their ability to create communities that feel natural, connected, and efficient. They're experts at weaving in green space, accessibility, and livability into every detail. That's exactly what we envisioned for the Preserve at Rockledge.
And they've delivered award-winning designs across Florida that not only meet regulatory hurdles, but also reduce construction friction down the line. And that's the kind of foresight that saves time, money, and avoids headaches. So Barnett Studio's experience really speaks for itself. They've designed thousands of multifamily units, from small boutique communities to large-scale 700-unit developments. And they bring that same attention to detail to everything that they do in every single project.
Yeah, and what really makes them unique is their background in healthcare architecture. They've designed assisted living communities, outpatient centers, and medical facilities, so they know how to meet the tough regulatory standards without losing that human touch.
And that's a rare combination. It's large-scale multifamily design with healthcare precision. And it's exactly that kind of expertise that makes the Preserve at Rockledge both beautiful and built to last. And when you add their level of experience to the strength of Kaufman Lynn and the care of operations of Colonial Oaks, you end up with a dream team of proven partners that will deliver on this project. Now, let's look at Trinity Development Partners, our team. You see the kind of team you want steering a project of this scale. Experienced, Florida-focused, and proven across every phase of development.
Yeah, they're based in Boca Raton and specialize in full cycle development, from land acquisition and entitlement to capital structuring and that vertical execution. Between the principals, there's over 70 years of experience.
Paul Shapansky, the CEO, alone brings an incredible background in real estate and structured finance. He's overseen more than 100 Walmart Cifra supercenters development projects in Mexico, and then another 10 development projects for Walmart supercenters here in the United States. And that's large-scale development expertise at its finest.
And then there's Abraham Wine, a lead accredited professional with decades of sustainable design and construction leadership. Together, they've entitled hundreds of acres and thousands of units across the state of Florida, projects that range from senior housing to major rental communities.
They bring that right mix of institutional experience, capital sophistication, and end-to-end execution. And it's exactly what it takes to make a project like the Preserve at Rockledge go smoothly from concept all the way to completion. Now let's look at the numbers. When we first underwrote this deal, we expected to bring in roughly $12 million in preferred equity from a JV partner in addition to LP capital to complete the entire capital stack. I mean, that was the plan until we closed, and then something pretty amazing happened.
Yeah, that's right. Post-close, the team was able to secure an additional $20 million in low-cost PACE financing. That's one move that completely eliminated the need for preferred equity. It cleaned up the structure, and it sent investor returns through the roof.
Yeah, and when you're looking at these numbers and you're thinking how, why, now we're talking about two major events that reduce capital, expanded profits, going to fewer people. That's all it is. First, we had the land contribution, and then we had the larger than expected PACE finance because of the environmental build. And that's what makes this opportunity so rare. The project itself is fully funded. The only equity now available, just that $3 million, is coming from one of the original sibling landowners who wanted to exit after close. That's it. That's all there's left in this deal.
Yeah, and that means that this is the cleanest, simplest structure that you're going to find in a deal like this. There's no preferred equity. There's no extra layers. There's no waterfall. There's just a direct 20% equity stake in a 320-unit senior living project with outstanding fundamentals.
And the result is, at the end of it, a 75% average annual return, 41% internal rate of return, and a 4x equity multiple on your investment. And this is driven by an efficient design, $95 million in cost-effective financing. And it's what we call cleaner, straightforward returns with all the upside. There's no haircuts or unnecessary complexity baked into this.
And that's the kind of alignment that investors love. This deal is already financed. The risk is reduced, and what's left is an opportunity to participate in one of the strongest returns that we've ever offered.
So let's start with the top and look at the rents and our comparables. When it comes to active senior living in this market, we are in a category of one. There isn't a single A-class independent living community for seniors like this in Rockledge or Cape Canaveral, and none currently under development. We are the only ones.
Ryan, this makes the project so exciting. We're not competing for market share, and when you're the first to deliver a best-in-class product in a high-demand area, the absorption and retention both are going to move in our favor.
Now, what you're seeing here, that we do have comparables, A-class properties across Florida in other areas outside of our market. And that's one of the ways we benchmark our rents to our finish levels with our amenities and what we're offering. So these comps give us data to price smartly while leading the local market.
So in short, the comps prove the concept, and our location gives us the first mover advantage. That combination is right where you want to be as an investor.
So let's look at what alternative seniors do have in this market. Now, if you're looking for anything that even resembles a senior community in this area, these are your options. And honestly, they're not what today's active seniors are looking for.
Right. The existing properties nearby, they're mostly assisted living or nursing style facilities. They come with higher price points, tighter restrictions, and a clinical feel that does not match the lifestyle that this demographic actually wants.
So they're offering extra care, a lot of care, but they're not really offering community. And what we're building is freedom, an independent resort-style environment designed for active seniors who still want to live life fully and not feel like they're managed.
And that difference is everything. These alternatives show the gap in the market, and the Preserve at Rockledge is stepping right into that.
Yeah, and look at the price points. I mean, you're even paying more for something that you're not exactly looking for. So here's the base case forecast. We modeled this conservatively using rent and expense data verified against not only the local comps, but also third-party feasibility reports. Our occupancy ramp-up, lease-up timeline, and expense assumptions are intentionally cautious. There's no aggressive projections baked into this to get to where we want to go.
It's an important point, Ryan. This forecast isn't built on wishful thinking. It's built on verified data and decades of operating experience from both Colonial Oaks and from Greystone. It's the difference between a story that sounds good and a plan that actually works.
Now, to get to our assumptions, we do have to assume a sale, and we made our sale assumptions even more conservative. What you're looking at right here, we're assuming a forced sale in year 4, not in a soft market, but in a full-on downturn. I'm talking a 25% drop in real estate values. And we do that by using this exit cap rate, this valuation metric of 6%.
In this scenario, the market has tanked, values are down, and we're still projecting outstanding investor returns. This is the kind of stress test that separates strong projects from speculative ones. And Ryan can share a bit more about the numbers.
Yeah, to put that in perspective, we're using a 6% cap rate. That's where 19 C-class workforce housing properties in this area are currently trading. So we're modeling this A-class new build as if it were decades old and in a distressed market.
And even with that kind of conservative pressure, the numbers still perform.
So when you take that forced sale scenario we just walked through in a down market, a 6 cap on the exit, a full stress test, this is the returns that it's producing. That's how we get there.
Even with those ultra conservative assumptions, this model still delivers the kind of returns that we showed you at the beginning. Ryan, do you mind walking us through those numbers for folks who just listened to the webinar?
Yeah, that's exactly how we got here. The disciplined underwriting, efficient design, and a capital structure investors rarely get to access. Whether you're coming in for any dollar amount, it's $3 million or below, you're investing that in day one today. And then we're assuming a sale where we capture everything and distribute the entire amount back to investors, less the debt and expenses. And that's how we get to that 75% average annual return. Now, here's a sensitivity analysis. And this slide shows what happens when we look beyond just the conservative base case. There is upside in addition, the upside potential based on where the market is today.
Right now, LEED certified A-class communities like ours are trading at valuations higher than anything that's shown on this slide. In other words, the real world numbers are already better than what we have modeled.
Yeah, so you can see the inverse relationship. Market cap, as market cap goes down, turns go up. Current market today is over here, in between 4.5% and 5%. So if this market holds steady or performs anywhere near current levels, the upside for this project gets really, really strong. So what's in place today? This is where we get to show you just how far along this project already is. We're not starting from scratch on this one. We're already into the execution phase when it comes to pre-development work and design.
We have entitlement in place for 370. We've also submitted a request to increase that number based on the updated demand in this market.
Yeah, we've received our environmental resource permit from St. John's River Water Management District. The grading plan is finalized, and the design itself was recognized for ASLA Florida Design Award for Outstanding Landscape and Architecture. That is a really big deal.
And all the front-end studies, environmental, cultural, geotechnical, have already been completed, along with a gopher tortoise survey and land use feasibility study. Every major due diligence milestone is already behind us.
Now, of course, throughout construction, the city will continue reviewing permits and conducting the inspections. That's normal, ongoing part of ground-up development. But the key point is that we're fully entitled for this plan and positioned to move efficiently through all the next steps.
And with Colonial Oaks already leading marketing and pre-leasing, we're expecting to have a strong occupancy momentum even before construction wraps up.
And so when we say the project is real and moving, we mean it. The foundation is solid, the details are dialed in, and every next step is already in motion.
Let's talk about the roadmap. We have pre-construction, horizontal work, vertical in 2 phases with a plan for lease up that gets finalized before construction is complete, and then we refinance.
And if you want a detailed map of this timeline, the 36-month execution calendar, see the end of this presentation. It's in the appendix. So capital in place today. In short, the land is closed on, the financing for the project is completely secured and in place, and our strategic partners are signed up and aligned. We're fully funded and getting ready to break ground in Q2 of 2026. So we close on the land in September 2025. The project is fully funded. With this limited equity available due to that one family member, a request for an early exit, this limited $3 million in available equity is giving you a 20% stake and $110 million cost to build. This will be made on a first-come, first-served basis for the accredited investors in our network. And one of our biggest wins was our environmental efficiency standards that allowed us to increase that C-PACE financing that we had in place in our underwriting from $30 million all the way up to $50 million. This allowed us to completely eliminate what we thought we needed and preferred equity to fund the project. This lowered our cost, removed equity from the project, and put more profits in the investors that come along and join us on this one.
Yeah, that move eliminated $12 million in preferred equity, which is expensive. And that lowered the overall cost of capital. And most importantly, it protected our investors' yield and offered better returns.
Yeah, it's proof that smart design pays off both in sustainability and returns. And we're ready to build. Investors are stepping into a structure that's built for maximum risk mitigated returns.
Let's talk about risk mitigation. Between Kaufman Lynch's construction bonding capacity of $1 billion plus, Colonial Oaks' operational track record, and the PACE financing, the big risks that you normally see in a large development like this are off the table.
And that's the difference between speculation and strategy. So the beauty of building a true institutional quality cash flowing product like this one is the flexibility it gives us and our investors at exit.
Our plan is to sell into a REIT. And this creates multiple options. Investors can choose to take REIT shares and stay in the deal. They can continue to benefit from steady cash flow for years to come.
And if you prefer liquidity, you can also sell your shares of the REIT, cash out completely, or do a combination of the two. Stay in for the income, take some of the profit off the table.
This is really cool. This is the kind of optionality that we love to build into our projects. Investors aren't locked into a single outcome. They have choices, they have control, and they also have ongoing opportunity.
Yeah, that's a good point. Designing investments that work for real people, real life, with the freedom to decide what comes next when you invest in these types of projects. So when you bring a team together for a project of this scale, you want more than just resumes, of course. You want people who have led complex projects and know how to deliver, and that is this team.
Yeah, Paul Shapansky is one of those rare executives who's done it all. CFO, COO, CEO, with deep experience in mergers, acquisitions, and integrations across industries like banking, healthcare, IT, aerospace manufacturing, and commercial real estate. Paul is the kind of operator who keeps complex organizations moving efficiently.
And then there's Abraham Wine, with more than 35 years of experience in real estate development, construction, architecture, and sustainable energy efficient design. Abraham brings the kind of technical precision and vision that keep a project ahead of schedule and on time.
Now, Brian Fay has spent 15 years in property development and management, completing more than 800 construction projects. Brian's hands-on, detail-oriented, and one of the most reliable builders that you will ever meet.
I've had the privilege of managing over 1,300 multifamily units and 5 ground-up development projects, and it's partnerships like this that make that work possible. Together, we bring operational strength and development discipline to every deal we do.
Yeah, and as I mentioned at the beginning, I specialize in residential assisted living as well, senior housing. And I'm committed to a design for real-world resident needs, not just the blueprints.
So in rounding it out, we have Sudeep, also a multifamily investor. He has a strong background in technology and strategy. He brings a sharp business mind and a growth-focused perspective to the things that we do as well.
Yeah, and so when we say that this team represents unmatched expertise and proven partnerships, that's not a tagline, it's true. It's a reflection of how we execute consistently.
So we have this team, our partners, meeting daily, developer, builder, operator, engineers, and that alignment keeps surprises out of the equation.
Collaboration, that's the invisible scaffolding that keeps the visible structure solid.
There's our beautiful faces all here. Now the capital stack. Our capital stack is very straightforward. At the top, you can see the senior construction loan financing coupled with that $50 million in PACE funding, thanks to our environmental efficiency standards, and then the sponsor investor equity that's participating in this deal. That additional CPACE eliminated the need for costly preferred equity that we had in here prior to close, and lowering that cost of capital and improving our projected returns.
In summary, better financing just leads to a better structure.
So all investor returns here in our base case projections, what you see is the bottom line. These numbers are net of fees that you see on the right.
Yeah, what you see is the bottom line after everything. It's a simple structure with straightforward fees. There's no waterfall. There's no promote structure.
Yeah, and investors keep all the upside on their equity. It's very simple, transparent, easy to understand.
So if this aligns with your portfolio, and we hope that it does, here's how you can take the next step.
Yeah, don't miss out on this. This will go very fast. Go to the portal now, review the docs, and secure your spot before it's too late. This is a 6C offering for accredited investors. First come, first serve. You have been warned.
And remember, there are no dumb questions. If anything's unclear about this deal, please reach out. We're happy to help walk you through it. All right, we have covered a lot. There's a clear need, a proven team, a fully funded structure, and there's a plan that makes sense.
Yeah, when you work with us, our mission is simple. Give investors insider access to profitable real estate opportunities that both build on cash flow and appreciation without the headaches of tenants and toilets and doing things yourself. The Preserve at Rockledge delivers just that. It's an amazing project that's been risk mitigated and built in and structured for fantastic projected returns. This resonates. Don't wait. Go to the investor portal, review the docs, and secure your spot while it's still available.
And thank you so much for spending some time with us today. We look forward to having you as a partner in the Preserve at Rockledge.
Thank you, Alex.
Thanks, Ryan. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are two main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial or medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.